Hi, welcome back to our YouTube channel. Our topic for today is Technical Analysis 101. Now, continuation from the previous topic, which we already identified that when it comes to trading tools, technically we separated into two main schools. One is Technical Analysis and one is Fundamental Analysis. And previously, I already roughly explained about Technical Analysis. So this particular topic is we are going to kickstart and analyze further and understand further about Technical Analysis itself. And I'm going to explain some of the common question being asked, like for example, which time frame that we need to use when it comes to technical analysis. These are all the questions commonly being asked, and also like for example, which technical indicators, or whether should we use the chart patterns or should we start with technical indicators, etc. So these are all the questions that we are going to answer along the way for this particular topic for technical analysis 101. Now, before we start, if this is the first time you approach our YouTube channel, please remember to subscribe to our YouTube channel and on your notification bell. My name is Ting Ting. Now, as usual, before we start, we need to do a disclaimer. Our topic for today is only meant for education purposes only. There's no buy or sell call. Let's start with the first concept about technical analysis. Now, first thing, when we look at technical analysis itself, mainly we are trying to search for a clue in our price itself. Now, it's like, according to your fundamental analysis, we are analyzing all the fundamental data itself to forecast what is going to happen or anticipate what is going to happen subsequently. When it comes to technical analysis, the same situation we are going to see, which is we are going to search for some of the clues to forecast what is going to happen subsequently or what is going to happen now or what we should do right now at this moment. So technically, we need to get some clues. And what are the clues that we need to solve? Mainly, I'm going to separate this into three parts. The first part that we are going to look at is the trends. We need to identify what is the current trend, because by identifying the current trend, we are able to identify whether we should buy right now or should we sell right now. Because before you can make any decision whether to buy or to sell right now, first thing actually that we need to answer by ourselves is what is the current trend. Because the current trend will help us to identify whether should we long or should we short in futures. Now, the second clues that we need to digest or we need to answer is time frame. So time frame, like for example, should we use a 5-minute chart or should we use a 15-minute chart or should we use an hourly chart? So commonly, these are all the questions that being asked as well. And the last one that we are going to look at is chart patterns. So chart patterns, I'm not going to identify the first part because we need to identify the basic before moving into the chart patterns. What are the chart patterns available and what are the things that we can look into it. But we are going to conclude with the last part is also whether should we use a technical indicators or should we use, for example, chart patterns itself. Now, let's start with the first part with the trend itself. Trend is the easiest part for us to identify. Even you are not currently trading in any of the products, easily we should be able to identify the trends. So mainly there are three trends. So the first one is uptrend, very obvious. If you are going to see that the price is going higher, then this is technically an uptrend. Now, another trend is what we call as a sideways trend. And very obviously, you should notice that the price hovering around a range. And the last one is a downtrend itself. So you can see basically if you can't categorize whether it's an uptrend or it's a downtrend, then technically it will be a sideways trend. So you can see that this is very obvious here is a downtrend. So identifying the trend itself will help us to make the decision whether should we long or whether should we short or whether should we buy or whether should we sell. Now, second items that we need to identify is what kind of time frames that we need to use. Now, commonly being asked, what kind of time frames that we need to use when it comes to trading, and this is what we call as a time frame. Can you see? But every trading platform, they identify the time frame differently, but generally you can see that these are all the common time frame. Now let me identify 5 common time frame before I explain to you actually which time frame to use. Now the first time frame is what we call it as a tick chart. Tick chart meaning any price movement. So long as the price start to move, then each movement is a tick itself. It's like right now, if it's 5,100, then if the price moves to 5,101, then there's another tick. So 5,100 is one tick, and 5,101 is another tick. The second one is what we call as a minute chart. So minute chart, it can be different people identify. So some of us, we might be using 1 minute chart. Some of us, we might be using 5 minutes chart. Some of us, we might be using 15 minutes chart. So meaning that each bar consists of the minute itself. Let's say if I selected 1 minute, for example. So meaning each bar is representing that particular minute movement. Now the third one is an hourly chart. So hourly chart, some of them, they might be selecting 1 hour, 2 hours, 3 hours, or even 4 hours as a one time frame. So this is what we call it as hourly chart. And the fourth one, which is the commonly being used, is a daily chart. Daily chart meaning if one bar representing one day itself. If you selected the third hourly, let's say you selected 4 hours, meaning one bar is representing a 4 hours time frame. And the last one is a weekly chart. Sometimes you want to eliminate those noises, etc. Sometimes you might be using weekly chart, which is more towards long-term perspective, long-term trading, long-term investment. So weekly chart, if it's a weekly chart, meaning if you are going to see one bar is representing 1 week itself. So these are all the 5 common time frame. And the commonly being asked question is which time frame that we should use. So I just want to let you know that selecting a time frame is a split second stuff. You don't need to spend too much of time in selecting a time frame. Someone thought that today I selected 15 minutes chart. My trading performance is not good. My result is not good. I thought that I need to change the time frame. For example, from 15 minutes charts, I might be changing 30 minutes chart. I just want to see whether is it makes sense or not. Is it my trading performance getting better or not? But this is not the correct way to do that, because we backtested a lot in terms of indicators, in terms of time frame, etc. And I can tell you, I can assure you that time frame doesn't make much of difference in terms of trading results. It's just a split seconds of decision. So don't spend too much of your time in selecting your time frame, and time frame doesn't affect your trading results a lot. So please, do not spend in the wrong direction. Do not spend in the wrong areas of learning. So if you have no idea, because today this topic is about TA 101, Technical Analysis 101. So if you are beginners, you have no ideas which one to start with, you can purely start with a daily chart. It's good enough. So I repeat, if you have no idea which one to start with, you can purely start with a daily chart. Now, the second part that we are going to look at, the last part that we are going to look at is chart types. Now, mainly for chart types, there are 2 common trading charts. And right now, I'm going to identify these 2 common trading types, trading charts based on the current market condition. Now, like for example, actually we have 3 common trading charts. Another one that I'm going to highlight is about bar chart. And if you are old enough, or you started your learning journey for technical analysis long enough, you notice that all the oldest book about technical analysis, they started with bar chart. But nowadays, you notice that right now, especially this generation, hardly people are using bar chart. That's the reason why I'm going to highlight 2 common trading charts, which I'm going to exclude the bar chart itself. So the first one, right now, many of the traders still they are using, which is the line chart, and the second one will be a candlestick chart. So what is the difference between line chart and candlestick chart? Let me show it to you. Now let me start with the first, which is the line chart. You can see that this is what we call as a line chart. For example, if you plot all the closing price, let's say on 1st of October, you plot the closing price, 2nd of October, you plot another closing price, then you dot it. Then you technically, you go and merge all the dots. You draw along the dots itself, you're going to see that this is going to be a line chart. Sometimes for us, we like to use a line chart because it's going to eliminate those noises itself. So I don't need many information, I don't need much of the information, but I just need some things that are easy for me to read. So line chart is good enough. So you can see, like for example, in this particular chart itself, this is based on current trading, one of the products in Malaysia. And you can see that obviously, you know that this is an uptrend. And this is a very obvious downtrend, and this is a very obvious uptrend. So line chart sometimes give you an easy to understand about the market condition itself. So this is what we call it as line chart. And the second trend chart is what we call it as a candlestick chart. Now, some of them, they don't like a line chart because many of the information is being lacked in a line chart itself. So they might need more information, like for example, what is happening throughout the day itself. So candlestick chart might provide you with more information. So technically, you can see that this is what we call it as a candlestick chart. So candlestick itself might give you more information compared to line chart, but it depends on individual. Sometimes in certain condition, you might be using a candlestick chart. Sometimes in certain condition, you might be using a line chart. It depends on personal preference. There's no right or wrong. Now, mainly for you to understand, because this is Technical Analysis 101. So what is candlestick chart? Candlestick chart, you can see that this is what we call it as a candle. A candle technically consists of 4 prices. So we have the day low, which is the, let's say for example, this particular candle is representing a day. So that particular day, the lowest price will be captured here. And that particular day itself, the highest price will be capturing here. If the closing price is higher than the opening price, then you're going to see this is a white candle itself. Now, similarly, if your closing price is lower than your opening price, then this will be a black candle. It's like this is a positive day itself, this is a negative day. But it depends on the trade platform that you're using. You can see that some of the platforms, they might be using green color and red color. And even green color and red color in China itself, it might be a reverse one. Meaning if it's a positive day, to them it's a red color bar. If it's a negative day, it's a green color bar. So when you use the trading platform that you're using, or when you're using any service provider, please confirm what kind of charts that they are using. So technically, you will be able to understand. So this is what we call it as the candlestick chart itself. So it's quite simple for you to understand about this candlestick itself. Now, the last part that I'm going to cover is about technical analysis itself. We are going to separate into 2 main parts. One is patterns, another one is indicators. Now, we have many other types, especially right now, the current eras, but mainly we are still categorized into patterns and indicators. Now, what are the difference between patterns and indicators? Let me explain to you, and later we are going to solve the answer. A common question being asked is whether should I start with indicators or should I start with patterns, or should I purely use the indicators, or should I use a few combination of indicators itself. Now, what is the patterns? Like for example, mainly in terms of patterns, we are going to see a reversal patterns and also a continuation patterns. Mainly, actually, we have more to cover. But patterns itself, compared to indicators, what is the main difference is patterns require some experience for you to interpret. And it is very subjective, meaning what? Different people, for the same chart, same time frame, same products, we might interpret it differently. Like for example, certain people for the same time frame, that they might be interpreting a double top. Certain people for the same chart, same time frame, etc., they might be interpreting as a double bottom. This happened before as well. So in terms of patterns, require more of experience, and because you need to have some experience in identifying and also interpreting the patterns itself. But in terms of indicators, it's more direct because indicators actually, they form from a formula, mathematics formulas to calculate and to derive this kind of indicators. And in short, it's quite easy for us to interpret because it doesn't matter whether you're using in your training platform or you're using in my training platform. The indicators that when you draw or when you insert, they are the same. So when you insert, let's say for example SMA, when you insert in your training platform and I insert in my training platform, we're going to see the same thing, same results, same answers that we are going to derive at. So it's more easy. And indicators, when you form by formulas, is a standardized one. There's no subjectivities being involved because when you use it in your platform, when I use it in my platform, easily we are able to interpret. And when we interpret indicators, to be very honest, it's quite easy for us to interpret and it's easy for you to apply compared to chart patterns. So at the end, you're going to see that when it comes to technical indicators, there are too many indicators. And my only advice to you is do not use too many indicators, especially in one of your training system itself. So for example, if you're going to use indicators, don't use too many indicators. One system, use one indicators will do. When you combine too many indicators, it is going to complicate your whole training system itself, and you yourself might not be able to select. Let's say for example, 4 indicators. The easiest one for you to interpret, if 2 indicators asking you to buy, 2 indicators asking you to sell, are you going to buy or are you going to sell? So make it very simple when it comes to trading. Don't include too many indicators in one trading system itself. If you separate, like for your trading, you separate to a few trading systems, you might be using different indicators for different system. That's okay, but don't combine too many indicators in one trading system. And you can see that this technical indicators is a very long list. I'm not yet finished for my training platform itself, and technically commonly being used indicators, we have about 20 to 30 indicators, and for commonly being heard indicators, we have about 40 to 50 indicators. There are too many technical indicators for you to learn actually. So you can learn some simple one for you to kickstart. That's good enough for you to start as well. Now, the final part for us to answer is which one should we use? Should we start with patterns or should we start with indicators? Now, because this topic itself is Technical Analysis 101, I strongly encourage you to start with indicators because if you are beginners, indicators is easier for you to understand, easier for you to apply, easier for you to kickstart as well, because you do not need to have some experience in terms of digesting the patterns, the chart patterns itself, because this requires some experience. But indicators is more direct because when you insert it, it's easy for you to apply, it's easy for you to identify whatever answers that you wanted to have it. So in short, if you are beginners and if you do not know which one to use, or you're just getting yourself started and you have no ideas, I would strongly advise you to start with indicators. So indicators, in terms of indicators, you can purely start with even simple moving average. Is good enough for you to be profitable in your trading itself. So maybe in future some topics we might be covering in details about chart patterns itself, in details in terms of indicators itself. So this comes to the end of our session. And please remember to subscribe to our YouTube channels and on your notification bell if you would like to learn any of the concept or let's say for example patterns for this particular technical analysis itself. You can comment in the comment box and we can cover in details for you. So thank you for your time and I wish you a good trading journey and bye bye.